Have you ever wondered why some people seem to become wealthier every single year, even though they don't work harder than everyone else? They don't win the lottery, they aren't famous, and they don't necessarily earn the highest salaries. The difference is simple. They understand one powerful idea that most people ignore. They let their money work for them. Imagine two friends who earn exactly the same salary. Every month, one spends every extra dollar on things that lose value. The other invests a small amount in the stock market. Fast forward 20 years. One is still living paycheck to paycheck, the other has built a portfolio worth hundreds of thousands of dollars. How can two people with the same income end up with completely different financial lives? The answer isn't luck, it's the power of investing. Today you'll learn why the stock market has helped ordinary people build extraordinary wealth, why most people are afraid of it, and how a simple habit can completely change your financial future. Let's start with the biggest misunderstanding. When most people hear stock market, they immediately think of crashes, losses, and risky gambling. That's because the news only talks about the market when something goes wrong. You rarely hear stories about the millions of investors quietly growing their wealth every year. Our brains naturally focus more on danger than opportunity. This is called negativity bias. It's why one scary headline can make us ignore years of positive growth. But here's the truth: temporary market drops are normal. They've happened many times before. And history shows that strong businesses continue growing over the long run. So, what exactly is a stock? Think about your favorite coffee shop. Imagine it's doing so well that the owner wants to open new branches. To raise money, the owner sells small pieces of the business. When you buy one of those pieces, you become a tiny owner. As the business grows, your share becomes more valuable. That's exactly how stocks work. When you buy a stock, you're buying a small ownership piece of a real company. Companies sell products, they solve problems, they make profits. As those companies grow, your investment can grow with them. You're not buying random numbers on a screen. You're becoming a part owner of businesses that millions of people use every day. Now, here's where many people go wrong. They think investing is about getting rich fast. They chase the next hot stock. They buy because everyone else is buying. Then they panic and sell when prices fall. That's not investing, that's gambling. Real investing is surprisingly simple. Imagine planting a tree. You don't expect fruit the next morning, you water it, you take care of it, and over time it grows stronger. Investing works the same way. The biggest rewards usually go to people who stay patient. Let's look at an example. Meet Rahul. Rahul decides to invest just $200 every month. Nothing fancy, no risky shortcuts. He simply invests consistently. Some months the market goes up, other months it goes down, but Rahul never stops. His friend Amit waits for the perfect time to invest. Every year he says, I'll start next month. Months become years. 20 years later, Rahul has built a large investment portfolio. Amit still wishes he had started earlier. The lesson is simple: time in the market is more important than trying to perfectly time the market. This brings us to one of the greatest secrets of wealth: compound growth. Imagine rolling a small snowball down a snowy hill. At first, it barely grows, but as it gets bigger, it collects even more snow. Soon, it becomes huge. Money works the same way. Your investments earn returns. Then those returns begin earning their own returns. Year after year, your money starts growing faster without you doing extra work. That's why people who start investing early often end up with much more wealth than those who wait. Another reason many people never become wealthy is psychology. Humans love immediate rewards. Buying a new phone feels exciting today. Investing that money feels boring. But wealthy people ask a different question. Instead of asking, what can this money buy today? They ask, what can this money become 10 years from now? That small change in thinking changes everything. Now let's talk about market crashes. Every crash feels frightening. Headlines predict disaster. People panic. But here's something interesting: every major market decline in history has eventually been followed by recovery. No one knows exactly when, but businesses continue creating products. People continue spending money. Innovation continues. Think about it this way: if your favorite store announces a 30% discount, you're probably excited. But when the stock market goes on sale, many people become afraid. The price is lower. Yet instead of buying, they run away. The difference is emotion. Successful investors don't ignore fear. They simply don't let fear control their decisions. Another myth is that you need thousands of dollars to begin investing. You don't. The amount isn't the most important thing. The habit is. Imagine brushing your teeth. Doing it once doesn't change much. Doing it every day for years makes a huge difference. Investing follows the same principle. Small investments made consistently can become surprisingly large over time. Here's another way to think about money. Most people have one income source, their salary. If they stop working, the income stops. But investments create another engine for building wealth. Over time, your money begins working even when you aren't. While you're sleeping, traveling, or spending time with family, your investments continue growing. That's one of the biggest advantages of investing. Your money gets a job. Does investing have risks? Absolutely. Stock prices go up and down. Some companies fail. But not investing also has a risk. Inflation slowly reduces the value of your money. If your cash sits in one place for years, it buys less and less. That's why simply saving money isn't always enough. The goal isn't to avoid all risk. The goal is to make smart, long term decisions. Diversify your investments, stay patient, keep learning, and avoid making emotional decisions. Here's the biggest lesson: the stock market doesn't reward people who are lucky, it rewards people who are disciplined, the people who invest consistently, the people who think long term, the people who stay calm when everyone else is panicking. Every successful investor started with their very first investment. No one begins as an expert, they simply begin. So the next time you receive your paycheck, ask yourself one question: will every dollar disappear by the end of the month? Or will I let a small part of it build my future? Because every dollar has two choices: it can buy today's happiness, or it can help create tomorrow's freedom. The choice is yours. The stock market isn't a shortcut to becoming rich overnight. It's a tool that rewards patience, consistency, and time. Start small, stay consistent, keep learning. Because the best investment you can make isn't just in the stock market, it's in your future. If you enjoyed this video and learned something new, don't forget to like, subscribe, and share it with someone who thinks investing is only for rich people. Thanks for watching, and I'll see you in the next video.